Congress last week passed the CARES Act, and President Trump signed it into law as the largest economic stimulus in the history of the United States, over $2 trillion. Now, there's stuff in there for small businesses, large businesses, certainly a lot for unemployment benefits. What I'm going to focus on today is what are the major things that you need to be aware of that you may see a benefit if you're getting close to retired or you're already retired. The biggest is, of course, these stimulus checks that they're just sending out to everybody. There's no age limitation on that. You can be drawing Social Security benefits, be fully retired, and if you don't make too much money, you can still get a stimulus check. It's $1,200 per person, so a married couple would be up to $2,400. And a minor child living at home would be $500 as long as they're 16 years old or younger. Does not cover a 17 or 18-year-old. Does not cover an adult child if you're claiming them as a dependent. But those stimulus checks, if you don't make too much money, you'll get those. Now, what is too much money? If you're a single filer, that benefit phases out between $75,000 and $99,000 of income. If you're a joint filer, it phases out between $150,000 and $198,000. Now, to determine that, they look at your adjusted gross income on your 2019 tax return. If you haven't already filed, they'll look at your 2018 tax return. Certainly, if your taxes are going to be lower in 2019 and you haven't filed yet, you might want to go ahead and file quickly. If you haven't filed a tax return in some years, you might want to go ahead and file for 2019, even if you don't owe any tax, just to make sure you can get your check. But that stimulus could be a great thing for you. The other biggie for consumers, especially retirees, is in 2020 they have waived the required minimum distribution, where you have to take out RMDs from IRAs or company retirement plans. You do not have to take an RMD in 2020. That would include inherited IRAs. So that's a big boom for tax planning to be able to have this extra year to really work on tax planning moving forward as part of your financial plan. Now, then they also made some changes on charitable contributions. You can deduct a cash gift to a church or charity up to $300 as an above-the-line deduction. What that means is it comes off adjusted gross income if you are not itemizing. In other words, if you're just doing a standard deduction, you can still do a $300 gift and it comes straight off adjusted gross income. Now, if you are itemizing and you're giving larger amounts to charity, just for 2020, you can actually give a gift to church or charity of cash for up to 100% of your adjusted gross income. Typically, it would be capped at 60%. Now it's 100%. It does not include a gift to a donor-advised fund or a family foundation, but to church or charity, that would be covered. So that would really help churches and charities if you're doing a lot of planned giving. And then the other big thing is if you're under age 59 and a half, if you've been adversely affected by COVID-19, you can take out up to $100,000 from your IRA or company plan, and there's no tax penalty. Now, what does it mean you're affected by COVID-19? That means either you, a spouse, or a minor child, dependent child, have gotten COVID-19, or you've been adversely affected financially, meaning you've been quarantined, laid off, or furloughed due to the virus. Then you're eligible. Now then, typically you have to pay that back within 3 years, and then there's no tax penalty, and they'll also forgive the tax because you've paid that money back in. So that really hits the highlights of this plan. Be sure you're checking out all the details of the CARES Act, certainly for things like if you're a business or you're unemployed, but hopefully this will give you a quick and concise overview of how you can benefit from this very aggressive stimulus package from Congress.